portfolios were generating a higher dividend payout with competitive returns compared to all the other ETFs that existed. So that's why we decided to launch Divvy, because there was a niche in the marketplace that needed to be filled.
Thank you for explaining that. That's super interesting how you kind of stumbled upon that. With technology companies now paying out dividends, Meta, for example, announcing a dividend, although its dividend yield is 0.4%. Do you anticipate at some point adding tech names and more tech names with the robust free cash flow to your portfolio, even if they're not exactly priced at a discount?
Sure. I mean, it's anything that's value-based. Right now, the problem is you're hard-pressed to find tech names that are value-based. It's all a growth play.
Right.
And this fund is a bottoms-up stock selection. Really, we're looking for hidden value that can come to fruition down the road. And when we get to a point where we can find that in the tech world with a little bit of yield, absolutely.
And David, I touched on it a little bit, but can you just explain why qualified dividends are such an attractive feature for a stock and why they exist?
Sure. In non-qualified accounts, non-IRA 401k accounts, essentially those qualified dividends are taxed as capital gains.
Yes.
Which under the current tax code gives somebody a pretty significant break.
Oh, I'm on a link. Okay, so I should not be on this show.
So I think we're having some technical difficulties there. But David, if you can still hear me, I do want to talk a little bit more about who this is for. I mean, we were talking about it with Amrita Nandakumar a little bit earlier about how difficult distribution is for some of these upstart funds. What kind of strategy are you pursuing when it comes to getting this on platforms, when it comes to marketing, for example?
Well, it's interesting. Like I said, we initially started it just because we have some clients that are smaller clients that really should be in ETFs. And when we found that we couldn't find anything that's competitive, we said, okay, we're going to start it and we're going to build it. Never really thought about marketing it per se. And then, of course, you start getting close to that 3-year point where you have a 3-year track record and you can actually get onto platforms. So we went out and we brought on regional wholesalers that we've hired on our team to come in, and also professional whose name is well known in the ETF industry when it comes to marketing ETFs. So this is all toward the end of last year. But up until now, we really haven't tried to market it. We are just starting as of January 1st to do that and get it out there. We've already gotten on some big platforms, and by the end of the year, I'm sure we'll be on a lot more.
And David, real quick, about 40 seconds, what have you learned going into the ETF industry? You said you weren't a fan of it. Are you a fan now?
I'm a fan of ETFs where they're needed, and especially when if you have accounts under $250,000, and sometimes it's just hard to cost-effectively diversify with individual securities, and their ETFs are a great niche. And this whole concept of these actively managed ETFs are really a void that I think is starting.
Deutsche Bank, Mizuho, Jefferies, and they're sort of the trendsetters right now. We'll see if some of the other banks get into the business if they start losing market share. But it's a small amount. So right now, even these banks are doing it for like 10 million a pop, and they're only doing it for selective clients.
What could go wrong, Lisa?
So with underwriting, anything that you underwrite bears risk, and that's the reason why you get more fees. And this is so you're promising to sell this debt, and if the market turns against you, right now it's not too difficult to place CLO equity because the market's ripping. But if we had another shift in market sentiment, then it could be difficult again, and then you could be taking a loss. Now it isn't a painfully big loss like leveraged loan underwrites where you had billions and billions in losses, but nonetheless, CLO equity is not the kind of a natural capital for a bank to hold. So you're going to have really stiff capital charges and maybe a very unpleasant call with your regulators.
Bloomberg's Lisa Lee, we thank you so much for your time and for joining us for one of the most read stories of the day. And before we let you go, we're going to keep a quick eye on markets here. We are watching the two-year yield really at the highest levels of the year so far. We are going to watch that all week as we have some critical PCE data coming up towards the end of the week here. The S&P even further on its declines. Stick with us. It does it for Bloomberg Markets. This is Bloomberg.
Regional sports networks. There's it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it? Peacock.
Yeah.
And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. today's Balance of Power. Live from Washington, D.C.
When will the money run out for Nikki Haley? Welcome to the fastest show in politics as the Koch network steers its cash to other races after Donald Trump completed the sweep of early states with a commanding win in South Carolina. I'm Joe Matthew alongside Kaylee Lyons in Washington, D.C., and Kaylee's Super Tuesday is only a week from tomorrow.
It is indeed. And of course, Nikki Haley still pledging to stay in this race through Super Tuesday. The question, Joe, is will she stay in it beyond with, as you say, big money donors starting to turn away from her? And we've all been talking about how as long as she has the resources, why not still in the game? But if the resources start draining, it gets a lot harder to do so.
That's true. She's got 10 fundraisers scheduled between now and Super Tuesday. She's going to find out firsthand with these donors about what they think. All the while, we're watching, of course, what's happening or not happening on Capitol Hill with the beginning of a shutdown, Kaylee, set for Friday. Lawmakers will have only 3 days when they get back to deal with this.
Yeah, it's not a lot of time. And frankly, when they said they might have the text of a deal released over the weekend and that did not happen, I think the odds of a partial shutdown probably ratcheted just that extra bit higher, and they might have been high from the get-go. And that's not even to discuss supplemental funding as well, the geopolitical considerations they have to grapple with here as well, including funding for Ukraine and Israel.
Yep, absolutely. Rick Davis and Jeannie Shanzano, our political panel, will be with us later this hour to talk about that Ukraine funding. We'll be joined as well by Laura Davison at Bloomberg, and Andrew Smith from the University of New Hampshire Survey Center is going to be with us. He's doing research beyond New Hampshire now to try to answer a lot of the same questions we're asking.
Yeah, what are the polls signaling? And frankly, judging by South Carolina, the polls to this point have looked pretty accurate, at least when it comes to the dominance of the frontrunner, Donald Trump. So we've got a lot ahead for you here on Bloomberg Television and Radio. First, though, as always, we got to get a check on the markets, and Bloomberg's Charlie Pellet has that from New York. Hey, Charlie.
Hi, thank you very much, Kayla Lyons. And earlier gains for the U.S. stock market, they have fizzled. Right now, we are looking at a down day for both the Dow and the S&P. NASDAQ holding on to an 8-point gain, but the S&P 500 index right now down 8, drop there of 0.2%. Dow Jones Industrial Average down 21, drop there of 0.1%. 10-year at 4.30% with a 2-year now yielding 4.72%. Traders are bracing for a barrage of economic data and remarks from Fed speakers that will help shape the outlook for interest rates. Again, the 10-year right now at 4.30%. We've got gold down 0.3%, 2,029 the ounce, while West Texas Intermediate crude up 1.9%, 77.95 for a barrel of WTI. Members of the Walton family sold roughly $1.5 billion worth of Walmart stock at the end of last week. The shares hovered near a record. Walmart up by 2% today. World national news briefly. Sweden has cleared the final obstacle to gaining NATO membership in a move that will solidify the alliance's grip over Northern Europe and the Baltic region. And Israel's central bank has left interest rates unchanged, opting against a second straight cut because of concern that inflation might accelerate again as the war against Hamas continues. Again, recapping, stocks are mixed. S&P lower right now by 6 points, down 0.1%. I'm Charlie Pellet. Balance of Power continues. Back we go to Washington once again. Joe Matthew and Kaylee Lyons.
Charlie Pellet, always looking at the way money is moving on Wall Street. Thank you so much. And of course, Joe and I have our eye on the way money is moving when it comes to electoral politics. And how much money might be left for Nikki Haley as the Koch network and others like Ken Griffin, who had supported her in the past, are turning their eyes down the ballot because at this point it's almost all but a given that Trump is going to be the nominee.
That's the real sign, right? I mean, she can stay in this race until the convention, presumably, but when the money dries up, when the donors start to act like the general election has begun, that's about as close to a bell ringing as we're going to get. The question is, are we really there yet?
It seems like we might be there. We might have a better idea of whether or not we're really there next Tuesday.
Yeah, that's right.
Super Tuesday.
Super Tuesday, yes. Look, some important states in play here, obviously. How many of them could she potentially win remain big questions. And then against the backdrop of the money, it's not getting easier. So we wanted to bring in Laura Davison to talk about this. Bloomberg News politics team leader. Laura, we got through South Carolina. Unheralded, by the way, we do need to acknowledge the unprecedented feat that Donald Trump just pulled off. New Hampshire, Iowa, yes, the Virgin Islands, Nevada, and South Carolina, all with commanding leads. Now we move on to Super Tuesday, and the money's starting to move. Laura, how much time does Nikki Haley have?
Even herself, she's admitted that she has about, a week, 10 days here. She said late last week that her campaign hasn't even thought about what comes next after Super Tuesday, which is sort of a signal that she's nodding that, that at that point they may be looking to get out of the race. She, of course, is continuing to campaign. She has this aggressive schedule all week, but beyond that, she has no plans announced publicly.
But she's still raking in money, even if the money's not coming from the Koch network, right? She raised, what, $1 million immediately after her 20-point loss in South Carolina. Is that all small money donors?
Yeah, well, and depends on your definition of small dollar. Where Nikki Haley is losing folks are the people who are giving, millions of dollars. She's still holding fundraisers all this week, 10 fundraisers over the course of 10 days that, to attend is somewhere between, $1,000, $5,000, sort of in that range. So she's bringing in money, but not the big amounts of money that she needs to make these massive ad buys. And at this point, she's sort of sustaining her campaign, keeping her folks on payroll, but they're not, making big new advances into states, later in March, for example.
10 fundraisers between now and Super Tuesday is pretty remarkable, considering that some of the money is already turning. Are these guarantees, Laura? What happens inside these fundraisers? These are folks who already paid to attend, right? Or is Nikki Haley going to start getting firsthand reminders of how difficult this is?
This is, a chance for a lot of her supporters who say, they acknowledge that, she may not be the nominee, or in some cases know that she's not going to be the nominee and publicly acknowledge that. But they see this as a chance to sort of build Haley up for the future. She's 52 years old. She very well, could run for president again in 2028. It's possible she, as it seems unlikely now, but possible she serves some role in a Trump administration. So they're sort of keeping her close to them, making sure that they have her, that she has their interest in mind as she moves forward.
Yeah.
What else is interesting about the idea that Nikki Haley donors are no longer going to be Nikki Haley donors and are eyeing elsewhere? It doesn't mean that they're going to Donald Trump, Laura. At least a lot of these big money individuals that we're talking about that weren't supporting him already, it doesn't seem like they're deciding to allocate their resources now to the general election. And we know that Trump's financial picture, given all of his legal battles, isn't exactly peachy keen. How precarious is his money situation looking if he's already having to compete in what everybody's assuming is just general election politics at this point?
His money situation is not good, particularly when you look compared to Biden, who hasn't really had to run much of a campaign so far. He's been able to stockpile cash. He does have the support of all the big, deep-pocketed donors on the Democratic side. That's where Trump really falls short. I mean, he has a handful, but you have folks like Ken Griffin, Steve Schwartzman, who consistently, year after year, are the biggest donors to the Republican Party. And they have said, look, we're going to donate to folks like Congress. We're going to look at some of these competitive Senate races. But Trump has not been able to win any money from them yet, which could be a huge issue, as he has, roughly about a third of the cash that Biden has on hand, and he has a lot to spend on legal bills going forward.
All right, Bloomberg's Laura Davison, our deputy team leader for U.S. politics. Thank you so much, as always, for joining us. And as we talk about how Trump decisively won South Carolina, as he's decisively won every primary contest thus far, it's worth keeping in mind, and Nikki Haley pointed to this, Joe, roughly 40% of Republican primary voters, or primary voters, as there's independents in this mix as well that we should consider, are not picking him, and he's essentially an incumbent Republican.
That's true. If you look at this from the incumbent standpoint, it might not be as impressive, I guess, to see him win all of the early states. Joe Biden's winning his as well, but you don't look at it because he's the president.
And so it raises a question of how those primary voters may translate into general election voters. And on that note, we want to bring in Andrew Smith now of the UNH Survey Center. He is the director there. Andrew, always great to see you and get your expertise far beyond New Hampshire, of course, a state that Trump also won. Where do those 40% of voters who did not vote for Trump in a primary, where are they likely to go in a general election?
Well, the great majority of them are likely to go and vote for Trump in a general election, presuming that he's the candidate. People have a great ability to rationalize why their party skunk is better than the other party skunk. So I imagine a lot of those voters will go to vote for Trump because they aren't engaged in politics that much, and they're going to vote for their team, and that is the Republican Party. The biggest problem that Trump has is not that they're going to go over and vote for Biden, but that they just won't show up. And turnout, I think, is really going to be the key issue in determining who wins the election this fall. It's essentially a replay of almost the last two presidential elections. And turnout of a few percentage points in key states makes the difference between who wins and who loses. And if, say, 5% of those Republican voters who voted for Haley don't show up in November, Donald Trump will lose.
So where's your head on this race, Andrew? We left New Hampshire talking with you about a general election that was already beginning. It's really looking like one now. You've got Trump and Joe Biden both at the border on the same day. They're now referring to each other directly. How long can this last for Nikki Haley as, you know, the potential alternative? She's in there just in case something goes wrong with the Trump campaign, it seems. But when does that start to look ridiculous?
Well, I think you're right that she's in there in case something happens, but that means that you're campaigning where you're relying on something that's completely out of your control, and that's not a good place to be in. My sense is this: her campaign is really all over but the crying, to use a phrase. She can stay on until Super Tuesday, see when the money runs out. I think that's going to be the key issue. But to the point of your last guest, that I think she is somebody who the Republican Party, or kind of the mainstream of the old Republican Party, is looking forward to as a potential candidate in 2028, presuming that Trump is already the nominee this time around. So she can go on for a little bit more, but I just don't think she really has any avenue to winning the nomination unless something really dramatic happens to Trump. And I don't even think that's a conviction in a court case. I think it's going to have to be something, a health-related thing, or something that really prevents him from being able to run.
So when you see polling, like some that we've conducted here at Bloomberg with Morning Consult, that suggests that voters, specifically swing state voters, would be less likely to vote for Trump if he were to be convicted of a felony, you don't necessarily think that matches reality?
Well, it may match reality right now, but again, the election's a long time away, and people are not in an election framework. By the time the election comes around, you're going to have so much mud thrown by both of these candidates that I have a feeling that both parties are just going to hold their nose and vote for the R or the D, not necessarily for the candidate who's running. It's really way too early. We've not seen an election like this where the nominees have been identified this early on, where there's really not much going to be going on between now and then, except a battle between the top two people that's just going to get uglier and uglier. And maybe that's what I fear it's going to get, but it's not going to be something that's really illuminating and a sparkling example of American democracy.
We're spending time with Andrew Smith, political scientist and head of the UNH Survey Center. When we were in New Hampshire with you, Andrew, the idea was that this state was unique because of the independent vote, that if Nikki Haley were to outperform anywhere, it would be here. Her campaign pointed to South Carolina in the same way. What did we learn from the demographic breakdown and the party breakdown in the Palmetto State here to try to gauge success and failure moving forward?
Well, Haley has done okay with the protest vote, essentially. Trump is going to get the majority of the mainstream Republicans, registered Republicans, and Haley's had to rely on people who are not the mainstream part of the party. And obviously getting 40% of that, frankly, is pretty good. And she got over 40% here in New Hampshire, which is pretty good, but it's certainly not enough to win. But I think the problem that we have to look at this is that Trump hasn't been able to win convincingly really anywhere. He's won, but he is, as you say, he's the incumbent. He should be able to win this by 80 to 90%, like Biden is able to do against, say, a Dean Phillips. What that tells me is that you've got just a deeply divided Republican Party that wishes it had somebody else, but it doesn't see that there is any alternative to Trump at this point.
Andrew, you just mentioned that Biden has been able to secure 80 to 90% of the vote. Do you think he'll be able to do that in the Michigan primary tomorrow, knowing that Arab Americans specifically there are suggesting they will be backing uncommitted instead of the president because of the issue of Gaza and his role in supporting Israel in that war effort against Hamas?
Yeah, I think Biden will be fine in the primary election. The error vote is very important, but it's important in just a few places in the state. And in a very close statewide election, whether or not they show up and vote is going to be a difference. But in a Democratic primary, I think Biden has all the controls of the party establishment itself. So I think he'll win handily there in Michigan.
What does it tell you when you start to see the money turn here, Andrew? This is a big headline for Nikki Haley. Koch brothers money is going down ballot. Which was really helping to breathe life into her ground operation specifically. She's not going to have that moving forward now. You're used to people asking you every 4 years when people are going to drop out. Give us the anatomy of the end of this campaign.
Well, you stop running when the money runs out. That's the ultimate truth of it. And I think the money is slowing down dramatically. And in fact, Haley needs so much money to counter Trump. In fact, I don't even think there's an amount of money that she could spend that would really effectively counter Donald Trump, because he is so well known to the electorate and to the Republican primary electorate. To convince them otherwise, I think there's almost no amount of money that could make that case. But she's not going to have the money just to keep the people going in her staff for too much longer. So I think that she's likely to go through Super Tuesday. She's been pretty honest by saying that she says she was going to be in South Carolina. She's there. She said she was going to be there at Super Tuesday. She's likely going to be there, but I just can't see her really practically going on much longer than that. About half of the delegates are going to be awarded on Super Tuesday, and it's going to be hard for her to win just anything but a fraction of those.
Andrew, we just have about a minute left with you, but it strikes me that we always knew Nikki Haley was going to be a long shot candidate. We knew that she was gaining momentum, yet we knew that Trump was still far and away ahead in pretty much every poll across the board, all of which at this point seem to have proven pretty accurate. Is this the most accurate election cycle you've seen in terms of polling in some time?
Yeah, polling in primaries is really it's a little bit of a crapshoot. You don't know what you're going to get because you don't know who's going to show up. But this has been a fairly straightforward primary going for, even including the Iowa caucuses, which are really quirky.
Yeah.
But I think the polls have been pretty accurate, largely because you essentially have an incumbent, and people are either going to vote for the incumbent or not. And now that Haley's the only one left, it's really just a two-person race. The biggest problem in primary polling always is who's going to show up. And I think that's one of the reasons that you see Trump's numbers overestimated a little bit.
Remember this conversation a week from tomorrow. Again, that'll be Super Tuesday. Andrew Smith, great to see you. Post New Hampshire. He's the director of the University of New Hampshire Survey Center and a reliable voice, Kaylee, on all things politics. Bringing the panel next.
Indeed.
Rick and Jeannie are on the way for their take on what's happening in Washington. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question its industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
From Bloomberg World headquarters, I'm Charlie Pellet. 121 the time right now on Wall Street. U.S. stocks trading mixed. We have got the Dow, the S&P, both lower. Stocks are meandering, little changed. NASDAQ holding on to a 12-point gain, up now by about 0.1%. Bottom line here, U.S. stock market is wavering near records as traders brace for a barrage of economic data, along with remarks from Fed speakers that will help shape the outlook for interest rates. S&P down 7 now, down 0.1%. Dow Industrials down 14, little change there. NASDAQ up 10, a gain of less than 0.1%. 10-year yield 4.30% with a 2-year 4.73%. Gold down $5.50 the ounce to $2,029, drop there of 0.3%, while West Texas Intermediate crude is up 1.8%, 77.84 for a barrel of WTI. Briefly, world national news, stories that we're monitoring right now. Former President Trump has filed notice that he will be appealing New York State's $454 million civil fraud verdict over his asset valuations, kicking off a fight that could drag out the case for months or longer. And Sweden has cleared the final obstacle to gaining NATO membership in a move that will solidify the alliance's grip over Northern Europe and the Baltic region. Recapping, stocks are mixed. S&P down 8 at 5,080, a drop now of 0.2%. Balance of power continues. Once again, your hosts, Kaylee Lines and Joe Matthew.
Charlie Pellet with his check on the markets. Thank you so much. Meanwhile, here at Bloomberg Television and Radio on Balance of Power, I'm doing my hourly or so check on Trump's Truth Social feed just to see, what the former president is talking about. His topic of choice for the last couple hours, it seems, Joe, is about the border.
Shocker.
Crooked Joe Biden's border invasion is destroying our country and killing our citizens, the former president says. And of course, he says this as he gears up on Thursday to make a trip to the border himself. And guess who else is going to the Texas border on Thursday?
This is going to be quite the split screen. Now, Donald Trump's going to Eagle Pass, right? Joe Biden, also making a run for the border, will be in Brownsville, Texas. And it really does remind us that it feels like the general election is already underway here. Nikki Haley, incidentally, will not be at the border on Thursday. But it brings us to the conversation about security funding. Think Ukraine, think Israel, Taiwan, the funding that has not cleared the House of Representatives, in part because of this whole border battle. And that's where we start with our panel today. Rick Davis is back with us, Bloomberg Politics contributor, alongside Jeannie Shanzano. And it's great to see both of you with us here on Bloomberg TV and radio. This is all one big story, Rick Davis, and I wonder your thoughts on the optics at the border and the impact they may have on this spending request for Ukraine and our other allies.
Well, I think both candidates see the importance of it, certainly in the polling data and around the country. Every town hall you go to, people talk about the out-of-control border and immigration and how it affects them. from New York to Chicago to LA to other small towns and border communities. I mean, it's everywhere in the news. And so these candidates have to address it. I would say Donald Trump's trying to regain an offensive move here. This has been a disaster for Republicans just prior to the 2-week recess, where the House passes a strong border bill attached to these security agreements with Ukraine and Taiwan, and it falls flat on dead ears. And the House has had to really try desperately to not look like the impediment to future border efforts. And Donald Trump, that's baggage for him. He's got to shrug that off, having used the House as his weapon of choice, and find a way to talk positively about it. And of course, this has all been manna from heaven for the White House and President Biden and his campaign. So he's got to go down there and try and cement some of that. And I wouldn't be surprised if there aren't some White House announcements on, Joe Biden's get tough efforts and executive orders that he could write.
Well, gee, that was the exact question I was going to ask you. Considering the president has been getting berated about the border for some time now and hasn't gone until he plans to go this week, should we be seeing this as a precursor to the executive action we've heard murmurs about, and even direct asks from House Republicans, even if they seem to be changing their mind on what they think the president should be doing unilaterally? But is this step one?
It is step one. I think we are going to hear about executive orders, EOs, as he goes to the border. I think we're then going to hear more about that during the State of the Union the following week, if indeed it does happen, if the government is open, and it does happen, because the president is reading the same polls we are. We just had a Monmouth poll out today. 6 to 7 out of 10 Americans describe the border as one of the most important issues in their vote, and he knows that. But the thing I think is that this was an enormous misstep on the part of Donald Trump and the Republicans, because now, to Rick's point, they are backtracking. They are trying to explain why, when the toughest security bill that we've ever seen came to the House, it was DOA, according to the House, to the Speaker. And of course, we know the reason was Donald Trump. And it's the same thing with the Ukraine funding. And so Donald Trump has taken what was a very good issue for Republicans, the border, and he, because it doesn't fit in his agenda, has made it a really tough issue for them. So I think we're going to see him try to backtrack off that. It's going to be really difficult because Americans know what is going on as it pertains to the border.
Well, before Joe Biden gets to the border, he's got a big meeting tomorrow at the White House, Rick. Mike Johnson, the Speaker, will be there along with the other leaders, Schumer, Jeffries, McConnell. But it's really a one-on-one. It seems like with Joe Biden and Mike Johnson, they've got a couple of things to talk about. Surely, as we discussed earlier, they'll get to this prospect of a government shutdown. But what is the case at this point that Joe Biden can make on Ukraine that has not already been made?
I think actually there's this terrific case that's being made by Mike Gallagher, who heads the Special Select China Committee in the House of Representatives. And he is very much pro getting these funding. And his point is everything we see and do related to Ukraine is a lesson to Beijing and the Communist Party there and the Red Army, who are watching us intently to see what it is we are willing to do to support democracy, to support stability in Europe, because they are learning as to what they can get away with out in the South China Sea, especially as it relates to Taiwan. So if we believe that, then we have to be concerned that the messages we're sending to Beijing are going to empower them for a much more potentially expensive, in both blood and treasure, and fight in the Pacific. And anybody who looks at this with that point of view, they would never oppose funding and want to do it immediately for Ukraine.
But Rick, how great is the number, do you think, that really is fundamentally opposed to additional aid for Ukraine? Are we talking the select few here, which in the House of Representatives has great ability to disrupt, or do you really think this is the prevailing thinking in the House Republican Conference right now?
Well, I think there are two things. One is you do see public support for Ukraine slipping, so that empowers members who follow polls in their districts very closely to second guess it. But I do think it emanates from the Freedom Caucus and a few, sort of dead enders, as John McCain used to like to call them, who actually think none of this matters, and they speak out against Ukraine because they think that'll get them favor with Donald Trump. the reality is you probably have over 300 people in the House of Representatives who would immediately vote to pass this bill if it ever gets to the floor. And of course, the House is supposed to be a majority rule. And the only thing that's stopping that happening is the Speaker not having the guts to put a vote down and say, let's see what the House of Representatives decides. It is not a place that has a veto or a kind of minority protections that the Senate has. It's a place that's supposed to act off a majority, and you got an ample majority for this vote in the House of Representatives.
So, Jeannie, I don't mean to keep asking the same questions here, but why not an address to the nation? If not from the Oval Office, Joe Biden does it from the border. He's going to be down there, could connect all of the dots on what you and Rick are talking about. Why not do that address from Brownsville, Texas on Thursday?
Yeah, I hope he does speak to the nation. I don't know if he will, but I think it is an important point because he's got to be making this case over and over again. He's got to tell the House of Representatives they need to go back to the Hastert rule. If there is a majority support for a bill, they will vote on it. He has to also make the case that this has been an enormously effective use of U.S. financial foreign aid. You know, you think about it. We have not had one fighter on the ground. We have not lost any lives. What have we done? We have exposed Vladimir Putin. We have shown that the West will push back, that the democratic nations of the world are joined, and that we will not turn aside. That's what we were showing at the beginning. With the House Republicans and this juggernaut of these few people, we are telling Vladimir Putin he was absolutely right, that he could wait the West out, we would grow tired and turn inward. That's the argument the president has to make. And oh, by the way, 80% of this money stays in the U.S. So there's an economic point to make. There is a security point to make. And you can't just make it once. You've got to shout it from the rooftops over and over again. So I hope he does that when he's in Brownsville, and I hope he does it every minute afterwards, because the president is the one who needs to lead this charge.
Well, and it raises the question of the ones who need convincing, as Rick was just talking about. Maybe there's over 300 members of the House who actually would vote for Ukraine aid if it was indeed on the floor. When he's in that meeting that Joe was mentioning tomorrow at the White House, it really seems the only one of the big four who need to be convinced on this is Mike Johnson, because Mitch McConnell, the Republican leader in the Senate, has been vocally in support of Ukraine, and Chuck Schumer and Hakeem Jeffries, of course, are aligned with the president on this. Jeannie, what can be done to change the mind of a House Speaker when we're not completely clear what his mind, what his thinking actually is on this?
Yeah, I mean, I think, of course, that he is being lorded over by Donald Trump, who doesn't want to see this pass. He doesn't want to see anything past the House at this point, given the fact that he is running against Joe Biden. So I think one thing the president could do is he could try to work with Johnson to say, we will give you cover on a discharge petition. Look at what Gottheimer and people like that were putting forward. He, needs to make that case. Mike Johnson has publicly stated he supports funding for Ukraine. And so I think we have to get publicly over and over again the president to ask him to respond publicly on why then he is not moving forward. And if it is immigration, as we heard this weekend from Republicans, then they have to remind the speaker and the rest of the caucus that they put a bill forward that was tough on security. So, you're looking at all the powers the president has. They are the powers to persuade, and he's going to have to do it publicly. Even though he's meeting behind closed doors with Mike Johnson, it's the public pressure that's important at this point.
All right, Rick Davis, 1 minute left. What's the strategy after that White House meeting for Mike Johnson? They're all going to go out to that reporter stakeout in the driveway. Does he eviscerate Joe Biden to please his conference in the House?
Look, I think he's going to have to talk tough because he has the right flank that he's got to throw some red meat to. But the reality is he's going to have to pivot and have a plan to actually take a vote. I can't imagine a scenario where he doesn't take a vote before the end of this week on either a CR or all of the above.
Wow, there you have it. On a Monday from Rick Davis. We can play the tape back, but he tends to know. Rick and Jeannie, great conversation. Jeannie Shanzano, our Bloomberg Politics contributor, alongside Rick Davis every day here on Balance of Power. Thank you for the insights, as always. We're going to delve into the prospect of a government shutdown arriving as soon as Friday with an expert coming up. Mark Goldwine from the Committee for a Responsible Federal Budget will be with us. He doesn't like anything he's seeing right now. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
Could face bigger challenges. Listens next.
It was going to keep bringing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are just about at the lows of the day right now on the S&P 500 index. The S&P in the red, down 14 points at 5,074 for the S&P. That is a drop right now of 0.3%. The Dow also lower by 77 points now, a decline of 0.2%. The NASDAQ Composite Index lower by 6, little change, down less than 0.1%. The 10-year yield, 4.30%, 2-year at 4.73%. We've got spot gold lower by 0.3%, now at $2,028 the ounce, while West Texas Intermediate crude up 1.7%, 77.82 a barrel. Bottom line here, traders are awaiting a barrage of economic data this week, along with remarks from Fed speakers that will help shape the outlook for interest rates. The Federal Trade Commission, 8 states and Washington, D.C. are now suing to block Kroger's $24.6 billion acquisition of Albertsons, arguing the tie-up will lead to lower wages for workers and higher prices for groceries. Kroger shares down 1.6%, Albertsons up now by 0.5%. Again, recapping, stocks lower, S&P down 13, drop there of 0.3%. Balance of power continues, the Monday edition. Back we go to Washington, and once again, Kaylee Lines and Joe Matthew.
All right, Charlie, doing God's work in New York. We thank you. From the nation's capital, Kaylee Lines and Joe Matthew here. This is Balance of Power, the fastest show in politics. And, you know, it's interesting. We talk about different topics and ideas throughout the course of an hour. In this particular hour, they all intersect. Yeah. We're at the point now where you cannot remove the tentacles from the campaign trail to the White House to Capitol Hill, where, of course, Donald Trump is impacting the outcome of a number of debates right now.
Yeah, as he has the ear of the House Speaker, Mike Johnson, and it's not really clear exactly what Mike Johnson might be thinking about the looming deadline to avoid a partial government shutdown.
Correct.
Come the end of
this week. Has Trump weighed in on that? We don't have a Truth Social on shutdown yet.
No, a lot on the border,
stand by,
some
though.
other things. But yes, definitely stand by, because of course the House still isn't back. They come back to town on Wednesday, and then they'll have to race over the course of just 3 legislative days to try to avert this. Reminding everybody, this is a partial government shutdown potentially. Just 4 appropriations bills are the ones that are supposed to pass to avert this. They're supposed to be the easy ones, Joe.
These are the
other 8
non-controversial bills.
Are the hard ones.
That's true, yes. So the countdown clocks will be running here. And we're going to do this twice. Although if we shut it down, if we start shutting down Friday, I would submit we're going to be in much more trouble the following week. Because to your point, you know, doing the HUD bill or the FDA bill is a lot less controversial than, say, the Pentagon or
when
Justice
you're talking
Department.
Defense, the big bulk of government spending on the 8th, that's where it gets really tricky. But of course, this is all tricky already. So on that note, trying to work through the trickiness is Mark Goldwine, who is joining us now from the Committee for a Responsible Federal Budget, where he is Senior Policy Director. So Mark, how do you see this going down? What odds are you personally putting on a partial shutdown by the end of this week?
I really try not to put odds on this stuff, but it's relatively high. Remember, the shutdown would happen midnight Friday, so it really wouldn't matter until sometime on Monday. But I think it's likely we have that little shutdown and then we try to pass these individual appropriations bills, and then probably a kick the can for that second set of bills so that they don't have a larger shutdown or a particularly long one.
You're, of course, again, at the Committee for a Responsible Federal Budget. That's the name on the door, Mark. Is it possible we don't get a responsible federal budget for this entire fiscal year? Because they're talking about CR for the duration at this point.
Well, it seems like we haven't had a responsible federal budget in some time. But yeah, it's possible we don't get any appropriations. I do think if they go the route of permanent continuing resolution, sort of kick the can, they're going to have to make so many adjustments to it that it'll almost look like a hybrid between a continuing resolution and an appropriations. But it is possible they can't get all their act together on the real true appropriations.
Well, and of course, if they don't, come the end of April, that's when the 1% sequester kicks in. 1% cuts to everything across the board, defense included. And when you're talking about defense that has a significantly larger budget, that 1% is worth a lot more than for other appropriations. Can you just remind us, walk us through what would really happen to the government financing if that 1% sequester kicks in? What would be detrimentally affected?
Well, here's the reality. A 1% sequester by itself is actually not that big a deal, and most of the agencies could bear it because they've been on the CR. The problem is twofold. The first is it's actually more than 1% right now on the non-defense side because of some weird stuff related to veterans and receipts. So it's actually more like a 5%. But the other is if we do a permanent CR, we don't actually get those 1% sequester. What we get is no sequester for defense and something closer to a 10% sequester on the non-defense. And trying to cut 10% of your budget in just half the year is just not doable. The only way is really significant rolling furloughs for many of the agencies.
Huh. Wow. Well, I mean, you'd think that would be quite a deterrent, Mark, but it seems to me defense spending will be the matter that makes a difference, right? When the hawks get a hold of this is going to be an ugly debate on Capitol Hill.
And with defense spending, it's less the level and it's more the stagnation, that if you do the CRs, you can't actually make new choices about what contracts to enter into and things like that. So with the Defense Department, it's really the flexibility that matters maybe more than the actual level of spending.
Well, and of course, as Joe and I were discussing, the first week of March is going to be pretty wild because, of course, you have this March 1st deadline, you have the March 8th deadline in terms of government funding, and smashed in between, the president is supposed to be giving his State of the Union address to a joint session of Congress on March 7th, so the eve of the deadline for the bigger chunk of appropriations bills that need to pass. And then just a few days after that, he's supposed to be giving his budget for the next fiscal year, when we still haven't sorted out, as Joe was alluding to, the budget for this current fiscal year. When the president outlines his policies, what should those policies look like to be more fiscally responsible?
Yeah, and I also heard there's some election stuff happening in that same time that we have to worry about.
Yes, indeed.
Yeah, I mean, look, we are deeply in debt. Interest this year is projected to be larger than the defense budget and larger than Medicare. It's expected to be the second largest government program, which is nuts if you think about it. So I hope the president comes forward with significant deficit reduction. Doesn't mean balancing the budget, doesn't mean paying off the debt, but at least getting us $5 to $8 trillion so the debt isn't growing much faster than the economy. And that's going to have to come from tax revenue, which actually this president's been pretty good about talking about. And it's going to have to come from spending cuts, which this president hasn't really talked about at all, especially in the healthcare system where there's so much waste that I think we could cut trillions of dollars and not even really miss it.
We haven't talked about raising revenues yet. Mark, is that a joke?
Well, I mean, actually, I just said the president's actually been pretty good on this issue. I do think he only wants to raise taxes on the 2% of Americans making over $400,000. I think it's a little silly that if we have a bad tax break, we'd want to leave it into effect for somebody making $399,000. But this president actually in his last budget put forward about $3 trillion of net tax increases, maybe even a little bit more. And I hope he'll put forward more this time because they got to be on the table so that we can discuss them, figure out which ones are good, which ones are bad. And ultimately, we're not going to be able to solve the debt without raising substantially more revenue than what we're projected to.
Mark, just in our final minute with you, we're obviously here on Bloomberg Television and radio, where both Joe and I have taken note that markets at this point don't seem that concerned about the risk that may be out there. Partial shutdown is not really reflected at all, it seems. What would you tell them about how worried they should be about fiscal conduct on Capitol Hill?
Well, look, a shutdown itself, it's disruptive, but it's just not like it's not a macroeconomic activity that's going to fundamentally change the economy. And so even if I were worried about shutdown, I wouldn't be worried about its effects. What I worry about is what it means for the ability of Congress and the president to solve other larger problems, right? Our debt is as large as the economy. And if we can't even keep the lights on, how are we gonna solve these major issues? And if we can't solve the major issues, then we are in big trouble. And I think you're starting to see that a little bit in the interest rates.
Okay, Mark, it's great to see you. Mark Goldwine, at the Committee for a Responsible Federal Budget. Thanks for the insights here and the fair warning, as it does look like we could, in fact, be headed for a shutdown starting Friday, Kaylee. Then we'll see where we are by the next Friday.
This whole laddered thing is complicated.
Be made complete. It's getting a little bit confusing here. We've got to turn to the chips, though. Everybody's talking NVIDIA on Wall Street. They're talking chips here, too, Kaylee. The CHIPS Act money. We'll have that next, only on Bloomberg.
Let me ask you about politics. You've been involved advising presidential candidates, I presume presidents as well. Do you ever have any interest in serving in a senior position in the federal government or running for office?
Absolutely, unequivocally, no.
The aggravation factor isn't worth it?
It's the aggravation factor, but it's more importantly is I don't believe there's any integrity in it.
So you do give money to politicians, though, because that's the system, but you...
It's part of the game. I think, to be honest, I think there's a need for a multi-party system in the U.S. to give more people a choice about where they can throw their voter support and their political support, but also to cause the country to sort of come together by having everybody have a role in deciding what is in the long-term best interest of the country. I've often believed that Black Americans as a people and as a voting bloc should adopt the same position that the original founders of the Congressional Black Caucus had in early 1970. Their philosophy was enunciated like this: Black Americans should have no permanent friends, no permanent enemies, just permanent interests.
Company news headlines on Bloomberg Radio. You're listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
So, Kaylee, you look at the Bloomberg and all you can see is NVIDIA from here to the horizon. It's been one of the remarkable stories of not just this past earnings season, but the past couple of years for NVIDIA. Yeah. And it's a big Washington story as well, because we're talking about the AI chips that the White House, that the Commerce Department does not want to fall into the hands of China. But it's been amazing to see the whole chip industry flourish with this incredible AI narrative. And it's making me wonder, if they're printing money like this on Wall Street, why do they need all the CHIPS Act money to make semiconductors here?
Well, the supply is still having difficulty meeting the demand. That is what NVIDIA said after earnings last week, is that demand is so strong and they just frankly can't keep up with it at this point. And in part, that's really what the Biden administration is trying to do. The problem is this isn't an overnight thing. They're giving out loans and grants and the like for these projects that will take years to develop.
Now, this is reshoring, right?
Ramped up, right.
For those of us playing along.
In the U.S.,
reshoring.
Yes. Correct.
Very expensive, apparently, and they all want more money.
Yeah, Gina Raimondo, the aforementioned Commerce Secretary, was actually speaking earlier today and said that U.S. chip firms want about $70 billion in these U.S. incentives, but we're talking what's available: $39 billion in grants, and then another $75 billion in loans, in guaranteed loans. So
maybe they should
it's a
sell their
limited
Nvidia stock.
pot of money and a lot of demand for it. And this is something that our very own Mackenzie Hawkins, who reports on economic policy here at Bloomberg, has been covering. In fact, she was there in person for Secretary Raimondo's speech earlier today, and she's joining us now in our Washington, D.C. studio. So, Mackenzie, the demand certainly is there. How quickly are these U.S. funds going to be allocated, and to whom?
So the U.S. passed and Biden signed the CHIPS Act into law in August 2022.
Right.
We're now, a year and a half on from that, and we're just really starting to see the money trickle out the door. The Commerce Department has announced 3 grants so far. Smaller scale grants. The most recent one was a bit bigger, $1.5 billion to Global Foundries, focused on what we call mature node or legacy chips. These are older versions of semiconductors that go into everything from your windshield wipers to your phone to also nuclear missiles. But a big part of Washington's focus is getting advanced cutting-edge chip capacity in the U.S. That's the types of chips that are made by Intel, by Taiwan Semiconductor Manufacturing Company, by Samsung, which are all building massive chip-making facilities that cost, well over $10 billion, sometimes $20 billion to construct. And that's the money that we expect to start seeing flowing out the door over the next couple of weeks.
So to that end, Intel delayed its big foundry project in Ohio recently, right? Talking about the need for funds to be distributed, and I know they probably have some of their own issues as well. But does the announcement today do anything to help shore up that project and others like it that you're describing?
So, Intel has a $20 billion project in Ohio, also a $20 billion expansion in Arizona. TSMC is building a $20 billion facility in Arizona. Massive, massive construction projects that take years to come online. So you've seen in a couple of instances a sliding schedule by a quarter, maybe 2 quarters from some of these big companies that they say is not out of the ordinary. Now, there are exceptions to that. TSMC, which is building in Phoenix, delayed one of its projects because of issues with local labor unions and the workforce supply. So it's not, a one-size-fits-all explanation for why we might start to see sliding schedules. But the way that the Commerce Department views this and these companies view this is a decades-long investment. The goal is for the U.S., so the Commerce Department has said, is to have 2 leading-edge manufacturing clusters by the end of the decade. Raimondo said today that she expects the country can produce 20% of the world's leading-edge logic chips by 2030. That's coming from zero. So there's a lot of progress that the country needs to make. Companies have certainly been getting restless about the CHIPS Act awards, but we didn't expect this to all happen all at once.
Yeah, sure.
Well, and to return to the point that there seems to be a lot more demand for CHIPS Act money than there actually is supply of those grants or of those loans. I know that Secretary Raimondo was speaking last week about potentially the need for a CHIPS 2, the idea that it can't just end here. How quickly could we see something like a CHIPS 2 actually become reality?
Oh, you guys cover Congress. So you know the odds there. But she did say today to reach this 20%, U.S. global capacity goal by the end of the decade, we have enough money. But she's also said that, the demand is staggering from companies like OpenAI, which are, these massive Gen AI facilities take thousands and thousands and thousands of chips, and companies just can't keep up. So whether we'll actually get more funding from Washington, I think there would be good reason to be skeptical of that. But we currently have, $39 billion in direct grants. $28 billion of that, the secretary said today, is slated to go towards these advanced chip makers. Now, they've collectively asked for 70. So some people are going to wind up unhappy. More than 600 companies have expressed interest in CHIPS Act funding. There's not enough to go around for all those projects.
Wow.
Got you. Amazing stuff and great reporting. Mackenzie Hawkins, thanks for bringing this to us because, boy, we spent a lot of time covering the debate around the CHIPS Act. My best answer to your question would be check back after the election, right? Can you imagine a sequel passing in this cycle? Good to see you, Mackenzie, and thank you. I'm Joe Matthew alongside Kaylee Lyons in Washington as we send things to New York now. Carol and Tim standing by for Bloomberg Business Week. Carol Master and Tim Stenivek. We're talking chips in D.C. here. Carol, how about you in New York?
Well, we're going to kind of go go low tech, if you will, and about the non-tech company that is marching towards that $1 trillion mark. We're talking about Berkshire Hathaway, which, of course, reported over the weekend. Warren Buffett came out with his shareholder letter to investors, so it's something we're going to break down. We think it's kind of important.
They got a lot of cash. They just don't necessarily know what to do with it. And an all-time high, I think.
Must be a nice problem to have.
Absolutely. Kaylee Lyons, I'll meet you 5 o'clock on the next edition of Balance of Power. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Radio, TV, YouTube, and Bloomberg Originals. Carol Masser along with Tim Stenivek, and let's get to the setup at this hour on this Monday, February 26th. And Tim, U.S. financial markets, I think it's all about marching towards the Fed's favorite inflation gauge this week. We get that later on this week. And then in the interim, throughout the week, we have a bunch of Fed speakers, so we'll be dissecting every word that they say.
Yeah, I got a great roundtable in just a few minutes. Also, shares of Berkshire continuing their crawl toward the $1 trillion club. Carol, not going to happen today unless something changes in the next couple of hours, but we're going to break down the company's latest quarter and shareholder letter, and also what Warren Buffett's saying about all that cash that they have on their balance sheet.
And we're going to get to a story, speaking of Berkshire and Warren Buffett, that came up, Tim, on your radar about a longtime professor at a Bronx medical school way uptown, also the widow of a top Buffett investor, the same person, about making a $1 billion investment to the school. It's all about training, I guess, the next round of doctors, if you will.
It turns out investing in Berkshire Hathaway quite a bit of time ago. Yeah, paid off. Hey, what hasn't paid off is Elon's Boring Company racking up safety violations. This is workers say they have to wade through deep puddles of toxic sludge.
Yeah, we're going to get into that. And the Koch network done funding Nikki Haley after this weekend as it and other billionaire GOP donors pivot down ballot. We know Kaylee and Joe were talking a lot about this. We're going to dig into this as well. But first up, we got to talk about the markets.
Hey, here's Charlie Pellet. He's got an update on today's business news and what the market's doing. Hey, Charlie.
Hi, thank you very much. Happy Monday to you both. We are looking at a mixed market right now. Whole lot of nothing on the S&P, down 8, 5,079. Drop now of just about 0.2%. Little change there. Stock market losing steam near records as traders brace for a barrage of economic data, along with remarks from Fed officials that will help shape the outlook for interest rates. Right now, again, the S&P down 8, down 0.2%. The Dow down less than 0.1%, down 30 points right now. NASDAQ, though, holding on to a 17-point gain, up by about 0.1%. 10-year yield 4.29% with a 2-year at 4.73%. Spot gold down 0.3%, 2,029 the ounce, while West Texas Intermediate crude oil up 1.5%, 77.62 for a barrel of WTI. Members of the Walton family sold roughly $1.5 billion worth of Walmart shares at the end of last week as the stock hovered near a record. Walmart up today by 1.5%. World and national news. Here's what you need to know. Former President Trump has filed notice that he is appealing New York State's $454 million fraud verdict over his asset valuations, kicking off a fight that could drag out the case for months or longer. Again, recapping stocks lower, S&P down 8 right now, drop of 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Well, the economy back to the forefront this week with the Federal Reserve's favored inflation gauge. That is due on Thursday. That's expected, Tim, to show the biggest rise in about a year.
Yeah, we're just seeing, as Charlie mentioned, small moves in in stocks, bonds, and the dollar as traders brace for an overall barrage of economic data and remarks from Fed speakers that will help shape the outlook for interest rates and for equities.
All right, so let's get to the weekly setup. With us is Michael McKee, Bloomberg News international economics and policy correspondent right here in studio. And then in our D.C. bureau, we've got Bloomberg Economics chief U.S. economist Anna Wong. Mike, I want to start with you. The week ahead, PCE core on Thursday. Is it all about that report this week and then what we're expected to see, which sounds like it's going to be a little hot?
Well, it's primarily about that. The Fed is looking for an entire picture of the economy because they're not going to move in March. So they're sort of tracking everything. And we get some other numbers that will matter in durable goods orders, business spending, and the income and spending part of PCE, which will tell us something about consumer spending. So we'll get some idea of strength of the economy. Jobless claims, everybody's keeping a half eye on to make sure that that doesn't start going way up. So there's a lot of data that is worth looking at and incorporating into your worldview. None of it is going to be dispositive to the Fed. No surprise there. And I was asked earlier, people think because Friday is the first of the month that we'd get a jobs report, but the timing is not the first Monday or first Friday of the month. It's 3 weeks after the week that includes the 12th. So since February is a short month, we end up
leave it to the government
with the
to
jobs report
make it a little
the following
complicated.
week. So you'll have to wait on that one.
That's okay. We got plenty of data this week to sift through, so I'm okay waiting another week for the jobs report. Hey, Anna Wong, come on in here because you and the team over at Bloomberg Economics have a great note out this week, and the debate that you're framing isn't necessarily between a soft landing and a hard landing. You're increasingly talking about a no landing scenario here. So break down what that is and why that's increasingly looking like the case, at least from your perspective.
Well, we actually think that a slowdown in economic growth is still the most likely. But what we are talking about in that note is that a lot of investors are increasingly talking about no landing because they see, for example, consumer sentiment rebounding. We are going to see that in the University of Michigan data this Friday, and also consumer sentiment data, consumer confidence is also rebounding. But I think overall, the data that Mike McKee just mentioned that we're going to get this week, for example, durable goods tomorrow, is going to show a pretty weak picture for January. We are expecting headline durable goods to contract by 5%, partly because Boeing only had 3 planes order in January. That is the lowest orders since 2020. And also we're expecting that the spending component in the PCE report this Thursday to show a sharp slowdown from the pace of spending from December.
Yeah, and I do think about, Anna and Mike, let me toss it back to you. I mean, just, backwards looking data versus maybe indicators that give us some idea of what's to come. I mean, how do you kind of parse through what really ultimately matters beyond that, what's atop the Fed's list of what they prefer to look at?
Well, we don't have really forward-looking indicators. If we did, we'd have all bought Berkshire Hathaway how many years ago?
We would not be here.
But what you try to look at is composition of data, and if there's a shift in the composition of data, if there's something that is starting to go up in price and you can logically make the case that it will continue, then that's something to watch in inflation, for example.
Even like sentiment, though, Mike? Like if you see, I'm always curious about
sentiment's a tough one. What studies have shown is that it is a sort of coincident indicator. It matches sort of what people's spending patterns are right now, but it doesn't tell you how they're going to spend in the future. So the famous Alan Greenspan quote was, "We watch what they say, not what they do." And that's kind of the thing. But there are some aspects of these confidence numbers that people look at, buying intentions, and the inflation numbers in the Michigan numbers. Those are used by the Fed as gauges of where people think things are going to go.
Anna Wong, come on back in here and go back to the call that you and the folks over at Bloomberg Economics are making about this idea of an economic slowdown this year. What is the data that you're seeing right now that you can point to that say, okay, this is why we think this is what's going to happen?
I keep asking myself questions as, Detective Danvers from True Detective Season 4 would ask, which is, what is the right question? And I think a very important question to ask ourselves is, why was the economy so resilient last year? And I think the answer is, number one, there was tremendous fiscal tailwind driven by the Biden administration's CHIPS Act and those industrial policies. And coming into this year, we see a lot of that tailwind turning into headwinds, because if you look at the primary deficit, it looks like the fiscal impulse would be marginally negative. Now, on top of that, in the non-farm payroll, we saw strength from state and government hiring last year, partly because of these education workers, right? And now we're seeing a fiscal cliff facing municipal and state government, and lots of schools announcing layoffs, partly because the receipts are drying up and revenues are going down at the state level. So I think at the fiscal level, that will become a major headwind going into this year. The second factor I would say that is a major headwind to economic growth this year is credit. And we still have the big commercial real estate challenges with over $900 billion maturing this year, so in CRE loans. So I think those two would be the biggest headwinds to economic growth this year.
So Anna, you guys think the most likely scenario is a slowdown. Does slowdown mean recession?
Well, I think it's going to be a very close one, Carol, because I think at the same time that we have these headwinds, we also have the fading impulse of monetary policy. This is the lags of Fed's rate hike. As you get into the middle of this year, it will start to dissipate. And so whether the fiscal headwinds will offset that diminishing monetary impulse would be a big question. So it's going to be a close one.
Well, all right. So let's the other thing I want to layer on top of this, and Mike, I want to just throw one last question to you. All the Fed speakers, anyone in particular that you think we should have on our radar?
This week is kind of interesting because a lot of the people who are talking aren't going to be necessarily talking about monetary policy and macroeconomics. But we do get Rob Schmidt, the new president of the Kansas City Fed, in his first speech tonight. So people will be looking to see how he lays out his view of the economy. And John Williams, who's the vice chair of the Open Market Committee, will be speaking twice this week. People will be looking for that. But I don't think this week is going to matter all that much, even though there are like 14 different speeches. Because next week, Jay Powell.
Yeah.
And everything, you'll have maybe the markets adjusting themselves little bits on all these Fed speaking, but the real moves are going to come when Jay Powell testifies before Congress.
So marking time a little bit ahead of that.
It's the main event.
It's the main event.
Yeah, everybody else is the warm-up.
When you're the Fed chair, that's what happens. All right, Michael McKean, Anna Wong, guys, thank you so much. So appreciate it. So let's go from our economic backdrop to a company that is often looked to, Tim, for its various businesses that can tell us a lot, too, about the macro business environment and just the macro environment overall.
Yeah, we're talking none other than Berkshire Hathaway. Berkshire's earnings always closely watched as a proxy for U.S. economic health because of the expansive nature of Warren Buffett's businesses, ranging from railroad, BNSF, Geico, Carol, and Dairy Queen.
So much going on, and the stock has been, it was moving closer to that $1 trillion mark, but not going to make it looks like, today. Let's get more, though, on the quarterly update, what we heard from Warren Buffett. With us is Bloomberg Intelligence Property and Casualty Insurance Senior Analyst Matthew Palazzola. He's here in studio. Matt, good to have you here. Stock was up. We were closer to the $1 trillion mark, although we still had a ways to go. What was important about the quarter for this company?
Yeah, so I'm not surprised that the stock didn't reach there today. I actually thought it would be down on the open.
Yeah, it was up 3%.
Yeah, I was surprised to see that. The quarter was fine. It wasn't really great positive. It wasn't really all that negative. I thought the insurance earnings were actually going to be a little better. They did carry the whole company, but I thought they were going to be a little bit better. If you peel back the onion on Geico, their expenses were a lot lower intentionally, which helped them out a lot artificially.
What do you mean intentionally?
So the auto insurance loss costs, meaning the cost of accidents, has risen dramatically since COVID.
Right, we've talked about this.
Yeah, we talk about this a lot, but from the context of how much it costs us in premiums.
Right, and so they're raising those premiums because their costs are going up more. They're losing money. So even no matter how much more you're paying, the auto insurance companies are still losing money the past couple of years. So what Geico did was they actually reduced a lot of staff. They reduced a lot of advertising. We looked at the run rate for the year, and they spent about $1.5 billion less than their run rate normal expenses just in Geico. So that propped them up a little bit too. I would say this, though. I think the negatives were in the letter, actually. So you've got the typical wit and wisdom of Buffett in there, which was great. He had a little homage to Charlie Munger, got a little dusty in my home office. But he talks kind of negatively about the railroad outlook and the energy outlook. So labor costs and energy and the regulatory environment, labor costs were in the railroad, and then the regulatory environment in energy. And those are go-forward issues, which will impact next year. So I think that's probably partially why the stock's selling off.
Okay, so let's talk a little bit about the balance sheet, because a big part of the story to emerge after Saturday's letter is the record pile of cash. I mean, we're talking $167.6 billion. The problem, and Warren Buffett's talked about this in the past, there's nowhere to put that money.
There's nowhere they can move.
I feel like he's been saying that for years.
He's been saying that for a long time, and it's been true. So what has been the newer thing, I would say, in the past maybe 5 years is we're talking about private equity bidding up a lot of the companies that they're looking at. And they haven't seen this level of competition in years. Besides the fact that you just need something gigantic to move the needle for them anyway. I mean, they bought Allegheny, was $12 billion. Their investments in these Japanese trading houses are now around $20 billion adjusted for currency, and that still doesn't move the needle. So I don't think we're going to see anything huge anytime soon.
But what about, sorry, Carol.
No. Finish on that, because I want to go back to actually the railroads and energy.
I was going to say, what about increasing stakes in Occidental, for example, because they have the option to do that, or increasing stakes in other companies they have?
So he talks about it. I always thought they would buy Occidental, right? Now that was, I think, very widely speculated. They threw cold water on that last year at the annual meeting. He actually reiterated it in the letter that we're not going to buy the entire company. We love it, but we're not going to buy the entire company. I think they can. They probably will increase the stake in it as much as they can. He also called it a forever investment. So that one and the Japan trading houses. So I think you'll see stuff like that on the margin. The 13F came out a couple days ago. Before there weren't any dramatic new positions in there. So it's a great problem.
Apple a little bit.
Yeah, I mean it's a good problem to have, but a problem nonetheless.
Not buying Nvidia, like it's not his new Apple or anything, right? No, it's not happening.
No, I don't think so.
Go back to, what we love about this company is that Warren Buffett, Berkshire Hathaway tend to really invest in just kind of these core industries that often are, or tell us a lot about the economy. So energy, railroad, you said higher labor costs, and energy specifically?
Energy specifically, so there's the regulatory environment specifically on the West Coast. So there's the wildfires, right? And if the utilities end up causing these, they have to shoulder a lot of the cost for them. So two things. One, Pacific Corp, which they own, is involved in a bunch of litigation. They're settling. It's not hugely material for the company as a whole, right? It's a couple of billion here or there. It's not good for Pacific Corp, but it's not going to hurt Berkshire's financial strength. But what Buffett had said was, depending on how those fire costs end up, may determine if we want to make further investments. So it was kind of, if we get banged on this, we may not invest much more.
Well, that's what I think is interesting. He's not necessarily pulling the plug on it, right, or backing out, but it doesn't necessarily is going to pony up more money to it.
I don't think so. I mean, the other thing in the railroad you mentioned, the railroad is constantly consuming capital. It wasn't necessarily negative or that things were going poorly there. It was just specific to railroads. They were having labor shortages, one, and two, he kind of railed against the government getting too involved in the labor negotiations and saying those keep coming up and those will hurt the margin of Burlington Northern, which has trailed peers historically.
Just very briefly, 20 seconds, May 4th, 2024. That's when the annual meeting is. What's
Next
on your
focal
radar?
point?
Next, I want to hear more from Ajit Jain and Greg Abel. They'll be there. They were there briefly for the past 2 years, but it would be nice to hear a lot more from Greg.
You do wonder how he pulls those guys in. They obviously, are key now to the future of the company, but with Charlie Munger and what's happened and his passing, how he kind of relies on these guys, whether they become part of kind of the show, if you will.
Yeah, I mean, I hope they will. Honestly, Munger didn't even really talk much last time anyway.
All right, going to leave it there. Matt, thanks so much. Matt Palazzola, he's property and casualty insurance senior analyst, covers Berkshire for our Bloomberg Intelligence team right here in studio. This is Bloomberg.
formed a partnership with Penny Pritzker at some point to do parking. Is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, well, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, they are lower. NASDAQ is advancing right now. Stock market losing steam near records with the S&P down 12 at 5,076. A drop right now of 0.2%. The Dow Jones Industrial Average down 32, a decline of less than 0.1%. NASDAQ continues to advance up 7 now, a gain there of just about 0.1%. 10-year yield 4.29% with the 2-year 4.73%. Spot gold today down 0.8%, 2,029 the ounce, and West Texas Intermediate crude oil up 1.4%, 77.53 for a barrel of WTI. Domino's delivered in the latest quarter. Shares of Domino's Pizza higher after fourth quarter U.S. comparable sales beat expectations, bucking a trend among fast food chains. Today we did have shares of Domino's Pizza. They are up right now by just about 5.9%. Shares of Papa John's down by 0.4%. World and national news: Sweden cleared the final obstacle to gaining NATO membership in a move that will solidify the alliance's grip over Northern Europe and the Baltic region. The approval by Hungary's parliament today came 21 months after the Nordic country submitted its membership bid jointly with Finland in response to Russia's invasion of Ukraine. Again, recapping, stocks lower. The S&P down 10 points now, a drop there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, Tim, Elon Musk and EVs.
Check.
Elon Musk and satellites and space exploration via SpaceX.
Check.
Then there's the brain, Elon's Neuralink project.
Okay, some news there recently, too. So we can go ahead and say check, I think, at this point, but don't sign me up for it.
And what we haven't heard much about in a while is Elon's tunneling venture, the Boring Company. That is until now.
I think it's fair to say uncheck on this one.
Exactly. Well, which is why our Bloomberg Business Week team had to do some digging around, no pun intended. They found out that the Boring Company's tiny Las Vegas loop is all that's come of Musk's promise and his promises overall to build super fast mass transit hyperloops. Workers say its tunnels, meantime, are packed with chemical sludge. This is a story by Max Chafkin and Sarah McBride of our Bloomberg News team.
Max is Bloomberg Business Week columnist, also contributor to the Elon Inc. podcast. A new episode dropping tomorrow. on the Bloomberg terminal and on Bloomberg.com/Eloning. Max is here in our.
Is it called the sludge
studios.
episode?
It's a sludge special.
Since we talked about the sludge, we got to start with the sludge because it's actually kind of serious, pretty serious
We're
stuff.
laughing, but yeah,
causes some pretty bad health effects.
Yeah, so I mean, the genesis of this story are these documents that we obtained, that Sarah McBride and I obtained from the state OSHA, that's the Occupational Health and Safety Administration, and it basically shows lots of complaints from workers about unsafe conditions, including this issue of like these toxic muck, which the workers say they've had to wade through. The reason it's toxic, it's not necessarily like they're doing something that's totally outside the norms of tunneling. These chemicals are sort of standard chemicals that are used, but the allegation from the workers is that corners are being cut, they're trying to move too fast, they're doing it on the cheap. And the funny thing about this, or it's not really funny, but these are the things that Elon Musk has set out to do to some extent. Like the whole point of the Boring Company, like many of Musk's companies, has been to cut unnecessary costs. The thing that we're hearing with this story, however, and I think you see echoes of this elsewhere in Elon Musk's empire actually, is that they're not necessarily finding lots of innovations there. Mm-hmm. They're ultimately ending up with a normal tunneling company, essentially, that happens to have a safety record that some would say is troubling.
Okay, so here's what's a little puzzling to me, Max. Elon Musk is a guy who's literally putting chips in people's heads. He's doing something that only until SpaceX did it, governments, taking a whole of government approach, could do. We've been able to dig tunnels for transportation purposes for over a century. Why is he running into so much trouble here?
So I think I wrote one of the first stories about this back in early 2017, talked to Elon Musk at the time about this, and just to put a slightly different spin on what you just said, and which relates to this, which is that SpaceX is not the first company, not the first private company to build rockets, right? The shuttle, all the things that NASA done were built by government contractors.
Right, but I guess what I'm saying is he's doing it in a way that is really innovative. I mean,
well, yeah, 100%, very much.
Reusable stuff that was a real
innovative
innovation.
Contracting process. They used contracts. They sold them directly to the government at a fixed price, which was new. But one of the core things that SpaceX did was like go out and look for existing technology and find a way to improve on it and do it cost effectively. Now, there are a lot of potential inefficiencies in the world of aerospace, and Musk has had a much harder time in some other fields finding similar sort of levels of inefficiency, just sort of low-hanging fruit. And I think the tunneling example is one. He talked about, back in 2017, he talked, it costs $1 billion a year, and it takes a mile, it takes a year to dig a mile, and it costs like $1 billion a mile, or some very large figure like that. And now Boring is doing maybe a little better on cost, although it's hard to know. But when you look at the actual pace that they're going, it's basically a mile a year. It's not that much faster than existing tunneling projects. And when you look at the end result, we're not talking about mass transit. We're not talking about, big subway cars full of people, which is actually what many people in Las Vegas, would have hoped for, because traffic there is really bad. What we're talking about are Teslas, just normal cars that can take 3 people and a driver. They're not even driverless, and they're limited to 40 miles an hour. So we're so far away from the kind of grand visions. And just to remind people, what Elon Musk originally promised here was New York to D.C. in 29 minutes, San Francisco to Los Angeles, in 35. Sounds awesome. You could commute from, you could commute halfway across the country, and it just hasn't gone that way. And I think in all sorts of different ways across Elon Musk's empire, you're seeing maybe fissures, cracks, ways in which the promises are not necessarily matching up. We saw this ruling with pay in Delaware. Of course, lots of problems documented at X/Twitter. And here you just have like a very visceral way where you have these grand promises, and in the end what you have is basically a glorified shuttle bus system. It doesn't take you from one end of the country to the other. It takes you from one end of the Las Vegas Convention Center to the other.
Is it just a case of that's all it can do so far?
The plan here, yeah, I mean, to some extent, yes. I mean, the thing that, if you squint, and I think the reason that this was approved, it's partly that it was approved because Las Vegas is a low regulation city. These are mostly on private property. There isn't a ton of oversight from the government, as there might be in other places. But also, they're talking about opening these stations throughout the city. But, when we talk to people on the ground there, It is a long way from happening. It's also hard to see how this is going to make a huge impact on traffic. Again, when you're talking about, moving people 3 at a time very, very slowly, a lot of things would have to happen.
Right.
And there are lots of reasons for skepticism. I mean, digging underground is hard. There's a reason it costs so much money. It costs so much money because there's stuff you can run into, complicated property rights, and of course,
so the company's not going to create 1 trillion jobs?
Well, yeah, which is what Elon Musk told me back in 2017. They were going to create 1 trillion jobs. I'd say it's a long way from that. To put it mildly, I mean there was sort of flirtations or talk of various projects. There was one in Maryland, one in Los Angeles, one in Chicago, and in all these cases, he was bringing along some of the most famous politicians in the United States. So it was Larry Hogan, governor of Maryland, former governor of Maryland, who was at the time a big star of the Republican Party. Rahm Emanuel, former chief of staff to President Obama, mayor of Chicago, Eric Garcetti, star mayor of Los Angeles. Like, a lot of people went for this, and they just, they haven't been able to deliver. And I think there's probably some element of distraction. Obviously, Musk has a lot going on. And also, I think just tunneling, this is hard. You're dealing with dirt and
putting
muck
people
and
up
stuff.
in space and stuff in space is really hard. Tapping into the auto industry. I mean, this is like going back to Tim's point, right? How many times we're like, you count out Elon Musk or whatever, and then he's like, whoa, look what he did. And I understand there's a lot on his plate right now, and that's got to be distracting. But should we not rule him out? Has he not found the right boring tool? What is it, Max?
Well, I would say, I mean, I think there's probably a bunch of different factors going on. I mean, one thing that was different with SpaceX is you had a very interested buyer, which was NASA. You had the U.S. government wanting to finance this thing, looking for somebody just like Elon Musk, and Elon Musk sort of finding a way to fit himself, to sort of make himself look like the thing that the U.S. government want. Elon Musk is really good at this. We're seeing this with Starlink as well, where he's this what seemed like a civilian technology, these internet services for, as Musk told it to Walter Isaacson, I think he said, it's to Netflix and chill. Increasingly, this looks like a potential military tool. This is gonna lead to government contracts and could be a big line of business for SpaceX. I think what happened is in 2016 and 2017, Donald Trump becomes president. There's a lot of talk about infrastructure. And in general, there's been a lot of talk about wanting to spend public money on infrastructure, but there hasn't been a ton of delivery, right? And I think a big part of this was predicated on this, $1 trillion, the thing that Trump was saying, which was like $1 trillion infrastructure plan. Mm-hmm. And, ultimately, infrastructure, whether it's Elon Musk or anyone else, is very expensive. It's politically dicey because you have land rights and so on, and it just hasn't come together with the speed that SpaceX came together.
Max, I want to dig into something that you said, that you mentioned a little earlier, which is the idea that back in 2017, 2018, a lot of politicians were kind of jumping up and down with the idea of collaborating with Elon Musk. What I noticed in your piece is that tone has totally shifted, and there are now local politicians who are saying, hey, thanks, but no thanks.
Yeah, including the mayor of Las Vegas, who is, Las Vegas is an interesting place because the city of Las Vegas actually doesn't contain most of the strip, so it's not like she has oversight over all this. As I said, a lot of it is on public property, but Caroline Goodman, the mayor, longtime mayor, her husband was a longtime mayor, she's like probably the most famous politician in Las Vegas, is essentially criticizing it and criticizing it on the grounds that it's unpractical. She, from the start has raised these safety concerns, which I think look prescient when you look at this OSHA thing. And she's essentially saying, this would be great if it could actually happen, but I don't see it. And that, again, that does represent a bit of a departure for Elon Musk. You do feel like in Las Vegas, at least, some of the magic, some of that kind of Elon Musk stardust, it just doesn't feel quite to, shine quite as brightly. Maybe that's the lights of the strip drowning it out. I don't know. But it definitely feels like there's something different going on there.
All right. Back to the workers, though, and their conditions. Is this something unusual in terms of infrastructure projects? And I'm always a little wary when there's a line in your story, although no one has been killed at a boring company work site so far in Vegas. It does just speak to how tricky it is.
Yeah, as I said, these are not no one's saying they're using chemicals that are worse than anybody else. What the workers are saying, what you see in these OSHA complaints are sort of like little things that maybe add up to a dangerous situation. And, we have seen similar stories like this around Tesla's car factories, around their, Reuters had a great piece some weeks ago about, a death at a SpaceX site. So, when you're radically trying to cut costs, when you're going around telling people that the only law that matters are the laws of physics, right? I think to some extent there are going to be costs of that, and we're seeing that. But we should say, like, this is probably more an indictment of Boring Company being less innovative rather than it's like the most dangerous place in America.
There just hasn't been Proofrock 3 yet, Max. And that, by the way, is the tunnel boring machine.
Read the story, you'll find out more.
Yeah, which is, promising, over-promising and under-delivering.
They have good names, those tunnel boring machines.
Yeah, T.S. Eliot would be proud.
Of course they do. All right, Max, thank you so much. Max Chafkin, he is Bloomberg Businessweek columnist. Story featured in the new episode of the Elon Inc. podcast, debuting tomorrow on the Bloomberg and at Bloomberg.com/Elon Inc. Coming up next, following this weekend's South Carolina Republican primary race results, billionaire GOP donors pivoting away from Nikki Haley, and we'll tell you where they're going. That's next.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock. Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, a million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. answer phrases or ask questions? What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
From Bloomberg World headquarters, I'm Charlie Pellet. 240 on Wall Street. We're looking at a mixed market. We have got the Dow Jones Industrial Average, S&P. They are both lower right now. S&P down 8 to 5,080. That is a drop now of 0.2%. Dow Industrials down 25, a decline there, little changed of less than 0.1%. NASDAQ Composite Index up 21, up now by 0.1%. Stock market losing steam near records as traders brace for a barrage of economic data and remarks from Fed officials this week, Fed speakers that will help shape the outlook for interest rates. 10-year yield 4.30% with a 2-year 4.74%. Spot gold lower by 0.3%, 2,029 the ounce, and West Texas Intermediate crude oil up 1.4%, 77.58 for a barrel of WTI. Kathy Wood sold shares of Taiwan Semiconductor Manufacturing Corp for the first time in more than 2 years, adding to moves to cut exposure in the chipmaker's key customer, NVIDIA. Shares today of the ARC Autonomous Technology Fund, the ETF, they are higher by 1.6%. Taiwan Semi up 1.1%. NVIDIA keeps on going up another 0.8%. Some of the other stories that we're following today involving Boeing. Regulators have issued a scathing report on Boeing's safety culture, putting further pressure on the company as it contends with the fallout from a near catastrophic accident at the start of the year. Again, recapping, S&P lower now by 9, drop there of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, Charlie, with the latest on the markets, now to politics and the political pivot. And when it comes to big donors, Tim, it's safe to say that it doesn't come as a surprise what we're going to tell you about.
Yeah, the news is that the Charles Koch-backed Americans for Prosperity Action will cut off funding for Nikki Haley's presidential campaign. Meantime, other GOP billionaires and big fundraisers are pivoting to where they believe their resources can make a difference. So away from the general election in terms of the president and more to those down-ballot races for the House and the Senate.
All right, let's get to it with Bloomberg News White House and politics reporter Gregory Cordy. He joins us from Washington, D.C. Gregory, great to have you back here with Tim and me. So first up, the money spigot starts to dry up. Not a surprise in terms of what we're hearing about kind of starting to back off or already backing off of Nikki Haley.
Yeah, so as we know, and on Saturday, we had the South Carolina Republican primary, and Nikki Haley actually overperformed there. If you look at where the polling averages had been going into that contest, she won 40% of the vote. Pretty extraordinary given how Trumpy that state is, that you have a sort of what we all consider to be the de facto incumbent Republican, right, in Donald Trump, losing 40% of his own party in a state that he should win easily. And yet, there's just doesn't seem to be much of a path to victory for Nikki Haley now. She did win 3 of the 50 delegates in South Carolina, but that's obviously nowhere near enough to get her back to being competitive. She now goes into Michigan into Super Tuesday without a clear path to victory. And so, as you say, the big donors have decided that it's not that they no longer support Nikki Haley. They still endorse her. They want her to win, but they've decided their money is much better spent elsewhere, and that elsewhere is a number of key Senate races across the country.
Gregory, before we go into that, though, how significant was it that these billionaire investors were backing Nikki Haley versus Donald Trump?
I mean, Donald Trump doesn't need the backing of billionaires to get his message out, right? Attention follows him wherever he goes. What Donald Trump needs money for is to pay his legal bills, but that's an entirely different question. Nikki Haley was able to use it.
Can he use money that he raises, or as he seems to get more control over the RNC, which is where it seems to be going, can he use that money?
Yeah, that's something that the RNC is going to have to work out because we are in the middle of a transition now. Just this morning, Ronna McDaniel, the chair of the RNC, announced that she was going to resign. The co-chair would also resign and make way for new Trump loyalists to take control of the party. And what Trump is hoping is that those loyalists that he's installing in the party will be able to use party funds to help pay his legal bills. The RNC says, look, we have a lot of legal issues to work out with there to kind of figure out, which money is eligible to be paid to pay Trump's legal bills, whether it's a good idea. Those are things that have to be worked out. But absolutely, Trump is hoping to find new sources of money to help pay those legal bills.
Okay, back to the billionaires and the money spigot here. When it comes to the Charles Koch-backed network of billionaires right now, Gregory, does sitting out the primary rule them sitting out the general election? Like, let's say Nikki Haley does end up dropping out. It does become Trump versus Biden. Is there a chance that these, quote unquote, never Trumpers go back and say, okay, you know what? We are going to back Trump here?
Yeah, this Koch-backed group called Americans for Prosperity Action has always had this sort of love-hate relationship with Donald Trump. Trump himself calls them Americans for no prosperity. And so, look, is it conceivable that they could go back into the Trump camp? It's possible, but there does seem to be enough bad blood there that a reconciliation seems unlikely. But also, what the Americans for Prosperity says is, look, our number one goal is to prevent Democrats from winning trifecta: the White House, the Senate, and the House of Representatives. That's what they're focused on. They don't need to win all three, but they want to prevent what they would see as a catastrophe of unified government rule in Washington under Joe Biden. And so that's why they're spending a lot of money on these Senate races, which are also obviously 6-year terms. They see as a better investment for the future, set them up for a post-Trump, post-Biden world in 2028.
It's not just, though, the Charles Koch-backed Americans for Prosperity Action. You guys and the team have a great story out. We're talking about Ken Griffin, right? There's other billionaires who are looking at those down ballot races.
Yeah, absolutely. And the Koch-backed group gets a lot of the attention because of the name, but obviously Ken Griffin's a big name too. And so, yeah, it's emblematic of a bigger shift and it was also, I would have to say, it's remarkable that Nikki Haley was able to keep those big donors in her camp for as long as she could with a diminishing, road to victory there. But yeah, I think both are examples of this donor class really looking for other opportunities to make their voice heard outside of the presidential race.
Gregory, we've documented in my opinion, the troubles that the Trump campaign faces and former President Trump faces in terms of legal challenges. And I'm wondering if that's what Nikki Haley is banking on right now, the idea that she'll be sort of the alternative if, for some reason, the former president is not able to run come November.
Like just-in-case candidate.
Yeah.
Yeah, one thing I would note is that while Haley's losing the support of all of these big dollar donors, she is making some of it up in small dollar donors. She's going to do 10 fundraisers in the next couple of weeks here. She is getting money from sort of grassroots people who I think have exactly that kind of idea for her, is that they just can't believe that Donald Trump is going to be the nominee. And for that matter, they can't believe that Joe Biden is in this race too. There's a lot of people looking for an alternative. The problem with Nikki Haley is that just waiting for Trump to go away. Look, there's elements of the Republican Party that have been waiting for Trump to go away for 9 years now, and it hasn't happened. But also, Trump, by gobbling up all these delegates, he will be able to install loyalists to him at the Republican National Convention so that even if something happens, whatever that is, it will be a very Trumpy convention to decide who his successor will be. And given the blood that we've seen between Trump and Haley, it's not likely to be Nikki Haley.
Hey, are we putting the cart before the horse because Super Tuesday is coming up, or is that just a date on the calendar. We kind of know how it's going to go.
Yeah, so what's happened now is we're transitioning from these 4 carve-out early states, Iowa, New Hampshire, Nevada, and South Carolina, to a race where a bunch of states, 15 states, are all going to vote on the same day. It's a lot harder to campaign in 15 states than one at a time, so that's one problem that Nikki Haley has. The other problem is that we're transitioning away from proportional delegate rules where you get delegates even if you don't win the overall race, to rules in most of these states where it's winner take all. All you need to do is get the most votes,
right,
and you get all of the delegates. And that is going to be a very high hill for Nikki Haley to climb, even if she overperforms. If she's been getting 40 to 45% in some of these early states, but she needs 51% to get all the delegates, and so the math just doesn't work out very well for her in Super Tuesday and beyond.
All right, well, great to check in with you. Bloomberg News, White House, and politics reporter Gregory Cordy joining us from D.C. Coming up next, our One More Thing, a Buffett investor's fortune funding a $1 billion gift. We'll tell you exactly the details. That's coming up next. Tim and I are back in just a moment.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery.
Okay.
It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always going to be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Was going to keep bringing World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Sources tell Bloomberg Charter Communications is exploring a takeover of a smaller rival, Altice USA. Those sources say Charter is working with financial advisors as it studies the merits of a potential deal for the broadband and video services provider. Charter shares, they are lower now by 1.69%. Altice USA surging now by 45.3%. Members of the Walton family sold roughly $1.5 billion worth of Walmart shares at the end of last week as the stock hovered near a record. According to filings with the SEC, the Walton Family Holdings Trust sold about 8.82 million shares between February 22nd and February 23rd. Walmart up roughly 11% this year, outperforming the 3% advance in the S&P Retail Select Industry Index. Some of the other stories that we're following for you: an activist investor says the Walt Disney Company should appoint a corporate chief technology officer and focus on technology transformation. That, according to Blackwell's Capital, which contends the entertainment and media giant should have an overarching CTO who oversees innovation. Fresh pet shares are surging today as the natural pet food maker forecasts better than expected net sales and as earnings per share beat Wall Street estimates. Freshpet up now by 18.9%. And Moderna shares are trading lower today as HSBC cut its rating on the stock to reduce a sell equivalent from hold, citing uncertainties in the drug maker's revenue. Today, Moderna down by 3.3%. And those are our top company stories at this hour. I'm Charlie Pellett, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, let's get to our one more thing in this hour. And this has a little bit of a Warren Buffett angle, actually a really big angle in terms of Warren Buffett and the wealth that those who invested with the legendary investor many years ago and their own wealth creation.
Yeah, we're talking about a woman named Ruth Gottesman. She's made a largest ever gift to a U.S. medical school. This is according to a statement from Albert Einstein College. She's the widow of a top Warren Buffett investor, and she's donated $1 billion to the university to create tuition-free medical school for future students.
Yeah, it turns out her husband, David Gottesman, was a friend of Buffett for 6 decades. His early investments in Berkshire Hathaway gave him a net worth of almost $3 billion as of mid-2022, according to our own Bloomberg Billionaires Index. And so we should say his wife, Ruth Gottesman, she has been at the school for a long, long time. It's Upper Manhattan. It's in the Bronx. The New York Times also writing about this and saying it's an area of the city's poorest borough, if you will. The Bronx has a high rate of premature deaths and ranks as the unhealthiest county in New York. So it's an area where a lot of folks within its environs are not getting the medical care that they need. So this big gift is said to be the largest ever to a U.S. medical school, but will help those who are pursuing plans to be a doctor and more.
Yeah, some other notable figures. This one coming from the New York Times. The school says that about 50% of its students owed more than $200,000 after graduating. Mm-hmm. At most other New York City medical schools, less than 25% of new doctors owed that much. So not only is this going to a school that serves a large portion of New Yorkers, but also serves a large portion of New Yorkers who owed more medical school debt than their peers who went to other schools.
Which is interesting because we've seen a trend, I feel like, over the last few years. You might remember back in 2018, Ken Langone, co-founder of Home Depot and a chair of NYU Langone's Health Board of Trustees, he and his wife donated about $100 million to help fund tuition for NYU medical students. This is $1 billion, so really amping it up. But in a world where we've talked about a shortage of healthcare professionals, people who maybe don't want to be doctors anymore, there's a lot of debt, like this could go a long way.
And then, of course, there is the Warren Buffett and Berkshire Hathaway angle.
Which is great.
Yeah, the proceeds of this coming from an early investment in Berkshire Hathaway. Somebody, as you mentioned, Carol, who knew Warren Buffett for, 6 decades before he passed away in recent years.
We used to do the stories about Coke millionaires, right?
Yeah.
That because he's been a longtime investor, Berkshire Hathaway and Warren Buffett in Coca-Cola, and just all of those who also kind of tapped into that.
I wonder if we're going to see more of this, especially as college tuition becomes. Oh, the other thing, she's not renaming the school. Oftentimes, when a donor does something like this, the school gets renamed. She wants to keep it Albert Einstein.
Which is pretty cool.
Yeah,
it's been there for a long, long time, as we said, in Upper Manhattan. All right, folks, we're getting ready to wrap up this hour of Bloomberg Business Week. For those of you watching on TV, of course, coming up next is the close. For those of you staying with us, Bloomberg Business Week continues on radio, YouTube, and Originals. And we're going to get into the markets are a little mellow today. We've got a lot of eco. We talked about that earlier on tap this week. But we're going to get into Meta and Mark Zuckerberg. He's got a packed week. He's jetting all over Asia, including he's going to make some swords.